Check mic 1 2 3. Check mic 1 2 3. Second try. Check the mic 1 2 3. All right, cool. We're good. Let's get this party started. Let me quickly post a link in Twitter. Yeah. Alrighty. Right, folks, welcome to the channel. We are doing New York openings lately. It's been a lot of fun. If you are not subscribed to the channel, then please do me a favor, hit that like button, subscribe, click on the bell, click on all so you don't miss anything for future notifications and videos and all that kind of good stuff. And today, of course, we are going to look at BTC. And some of the macros, because there's still a lot of stuff going on in the world that can influence the price up and down. We still have a war going on. We have something with oil and supply chain. We have inflation. Crypto companies are falling over. So, my lordy, we still have some black swans here and there. It's crazy. All right, cool. Let's let's first go to our Friday analysis, where we said that the price could break out and that we could break a big head and shoulder pattern, but usually these patterns are not so reliable. They tend to not fulfill more than they do fulfill, so therefore just be very careful. The target actually would have been 25,500 ish if we would have succeeded. This is your left shoulder. This is the head right here. And then this is your right shoulder. And you see it was just kind of going sideways. So I would say failed pattern. It's not going to happen. This one is off the table. We did say during Friday's video, said be careful, there might be a scenario where they're going to trap the longs and then we are going lower, where this is your top and then this is your higher top. So we're having a breakout, we're making a new high. Everyone thinks, yeah, that's it, we're going higher, and then we're just doing whoop, and then we're really going lower. Matter of fact, let me real quick play the video from Friday, only the 10 seconds where I said it, and then after that I will take it out. That is this right here. Having a breakout, we are breaching this new high, also trapping a lot of longs, and then it's like full jet, and then we're just dumping lower, and then this was a very big fake out. Now, if that would... So, yeah, okay, of course it didn't have that much going much lower, but we did have that filled pattern where we're going a little bit lower. So actually, if you would have taken the short there, then was quite a nice move. 4%, 4.5%, quite a nice move. So it's actually just a swing filled pattern. All right, cool. I have some good news, have some bad news. There are some charts that are finally saying it looks all a little bit better. If I'm just looking here on the hourly, now we're here anyways, you're seeing that the deep red periods with just a bit of green and a long deep red period, it looks like it's slowly flipping over a little bit, where we have more green, tiny bit red, more green, tiny bit red, and that is the first signal that I'm like, yeah, nice. I mean, to see it on the bigger time frames is better, of course, but so far I would say, not bad, not bad. The only thing I'm maybe a little bit concerned about is that this looks like something that could roll over. And on the higher time frames, we have a few bearish signals. Let me quickly head over to the 4 hourly. where you could see that here we have a bearish divergence. That's a little bit ugly. Oh, we just see that now we're printing a red dot and a blood diamond. That is a bummer. Earlier today it was not there yet, and I actually want to say these RSIs were super split on Friday, and then you see during the weekend they came more together. This was a big concern for me because we had a bullish divergence here with the money flow going up, and I said, well, actually this looks good. We might get some of a relief rally, but this money flow is now just a little bit flat. That is ugly. The RSIs are coming together now, but we're having a red dot and the VWAP's going lower. So I don't know, mixed signals. The money flow needs to pick up. If else, I'm afraid that this is going to roll over, and then we're just going to dump down again. 8 minutes before New York, so I will quickly, in a few minutes, look at that. Now, first, the most important levels and scenarios that we're looking at. So this on a 4-hourly is like, yeah. Then on the daily here, of course, we still have that bullish divergence. This, of course, can take days, maybe not weeks before this really plays out, and we're going higher. We have a few waves down, and we're then trading a little bit higher, and then we're finally rolling over again. That can be a very, very long time. So just because we now have a red day here, that doesn't mean anything. Matter of fact, this thing could just do like this, and then we're just going higher again. Or I've also seen it doing like this, and you think, oh no, that was it, and then we're getting a tight trigger wave. You're like, oh, we're going lower, and you're like, nope, fooled you. And then kind of we stayed in around that zero line for a little bit, trapping some longs and shorts, and then eventually we're going higher, trading something like this, and then we're eventually going lower. Matter of fact, you actually see it here a little bit. You see that the momentum waves are staying kind of close here to the zero line before you're getting this big bump to the upside. Something that I also don't like a lot here on the daily, let me quickly zoom in so it's very clear for everyone, is that it looks like that this money flow wants to roll over again. That is a little bit ugly. Also, the VWAP is going lower. So from everything that we see here, I find the money flow the most important. I have seen bearish and bullish divergences not playing out just because the money flow was not there. So for me, that money flow really is the most important indicator and confirmation on putting in a trade. Let's quickly now zoom to the daily. This is our daily setup right here because the market is opening in 5 minutes, and you guys know what I'm looking out for. This is on the 15 minute. Let me quickly walk through the levels so that you kind of have an idea. We have the daily value high, which is now I'm seeing not really correct. Let me extend this. Okay, so the daily value high is a little bit lower. Earlier it was then higher, and therefore we also had a perfect rejection. At 21,480-ish, then we have the point of control just underneath. That is 21,410. So these are all resistances. Then we have a PDEQ from yesterday that we're kind of now resisting off, and that VWAP. Let me show you that VWAP right now. You see the white line disappearing and coming back in the screen. That is our VWAP, and you can see they were also kind of bouncing off from there. And then underneath us, we're having a few support levels. One that we just bounced off now perfectly is the golden pocket, the daily value area low. And we're also having a macro point of control. What do I mean with that? Let me zoom out. And I'm always having a daily point of control on my screen and a macro one. And a macro is then from this very big volume node that you see here. This is measured from, the 14th or 13th and now to all the way here. So that's kind of the new big trading range that we're looking at. And you see then that we have two major areas that have the most traded volume, and those are these two humps. And just before the weekend, the most traded volume was here at 21,600. And that was a very important support and resistance before. But now, since the price is spending quite some time around these levels, as you can see right here, then you also see that most traded volume is then moving a little bit more upwards. But I think once the price starts dropping down again, then this macro point of control will switch again, because as you can also see, the length here of the candles from the left to the right, this one ends somewhere here, and this one ends just a little bit further. So both areas, there's not like one holy point of control and that's it. No, but both areas will be support and resistance. So if we break it to the downside, then the price could trade in this range for a while before we are maybe breaking this or we go back up again. So then you kind of know what my macro point of control is when you see it in my charts. Matter in fact, you know what? Let's stay on this 4 hour. Or did we just discuss this already? The bearish divergence. I think we did. Oh yeah, we just did it already. Okay, then let's quickly head over then to the daily. Oh, we also talked about it that the money flow looks ugly. So what I'm looking at the macro. Let's do the 12-minute. That we just bounced off the golden pocket. Of course, that golden pocket is then measured here from the bottom to this top right here. The question is how much can we retrace from the top that we have put in. And actually it would be nice if we maybe get like a double touch here and then going higher. This would definitely be a trade for me. So far when we were dumping down just earlier, if I look at, let's say, the 6-minute, then you're seeing here, this is a little bit confusing because we have quite some red and green dots right here, but then curving up. The money flow is still pretty much in the red. RSIs are pinching a little bit together, but to be honest, I don't find it's very strong. And don't get fooled, this is a tight trading range. We're talking about 0.5% here between the golden pocket, the VWAP, and a daily volume area low. So want to see a little bit more confirmation. This is not super strong yet. Okay, 2 minutes before New York opens, let's see what is CNBC saying. Slightly in the green for now. Slightly in the green for now. If we're looking at the dollar index, then we're seeing a slight move to the downside. Nothing super major, I would say. Also here, we are kind of creating a range, as in that this is kind of the trading range for the dollar index. I would not be surprised if this is just a big accumulation zone until we are breaking out. My money is on we are breaking out to the upside. And I think we are maybe visiting in the next couple of weeks and months highs from the past. That will be somewhere between 112 and 140-ish. So let's see where we had that. I see that computer's a little bit slow. Could be my internet. I'm doing a lot of stuff at the same time with multiple screens. Yeah, so that is here. No, it's not here. We need to go even further back. Let me see from which period of time we're talking about. You know, and I'll take the weekly. That's maybe a little bit easier. Here was. Okay, so this was from 2001, where we had a long trading range between 112 and 120-ish, and long I really mean months. So I think that could be that could definitely be a top. I'm not saying it's the top, but I definitely think there can be a top. And if you're looking this on the monthly, on the weekly, you're seeing that this looks quite vertical, and then usually that that just results in the prices going down. But how high is the top? You don't know. So if we're now making a sideways, some sideways move, that would still be healthy. Of course, negative for Bitcoin because if the dollar index pumps, BTC dumps. But it would explain at least some price action. On the money flow, though, look at this weekly, how high the money flow is. Unbelievable. The RSIs are nice and tight pinched together. Yes, we have some red and green dots, but they constantly invalidate each other. That's pretty crazy. So, yeah, I think this still has room to run. For the news, I'm afraid that we still have some black swans. It looks like it's official that Russia is defaulting on their debt. And the first time, I think, in 100 years. Then we have still, of course, the whole war with Ukraine and Russia and sanctions. That can definitely be some kind of black swan event. A lot of big crypto companies are saying that that they, could be a risk, as in defaulting with the whole Celsius. Then we had stuff with Luna. Now we have some other platforms that, they raise some eyebrows. There's some questions like, hey, are they solvent enough? Is the money really there? Or is it just a number on the screen? And is maybe money not there at all? So, yeah, that is all of that could really be a black swan event. What really eventually pulls the trigger, that we don't know. All right, New York is, see what the S&P is doing. Slightly in the green, that was already expected. This is a chart that you guys have been seeing already quite some times. We have a nice fat bullish divergence here on the price. Of course, then always the question is how far can we go? Don't forget, we're still in a bear market. So far, we had quite the pump up, 7.5% from the top here. This top is a little bit too low. From the bottom here to the top. That is quite a lot for the S&P 500 in itself, but don't get fooled. These runs to the upside can be quite a lot in bear markets, and I do not change my bias. Is that we are still very much in a bear market, and we also haven't changed market structure, meaning we are not creating higher highs and higher lows. And as long as we are still in the lower highs and the lower lows, this is still very much a bear market. I saw a very interesting video from Benjamin Cohen, a great technical analyst, who said that the stock market might rally again once inflation has peaked out. Now, of course, when does inflation peak out? We never know. So the stock market could go down at 10, 20, 30%. We have absolutely no idea. But that is definitely something interesting to look out for. Once we see the first numbers coming out that inflation might be peaking out, then that might signal some kind of a bottom, which of course can also be a little bit scary, because we might have 1 month or 1 quarter where the inflation is 0.1, 0.2, 0.3% lower than the previous measure period, month or quarter, whatever. And I say that was it, that was the peak, and then boom, the month after that, then suddenly inflation goes higher again, and then it's all red alert, and everyone starts selling, and you get a massive panic selling to the downside. Now, if we're just looking at our indicators, then I would say, yes, we have a bullish divergence, but we are in quite the ugly bear market. Money flow is just not curving up. Yes, we have the RSIs going quite high and the view up and everything, but that money flow is just not curving up. Now, also here is exactly the same for BTC. If we have a bullish divergence right here, that takes some time to play out. So we can definitely have a few red days before we are maybe going higher. Now, major levels for the S&P that I'm looking out for is this support and resistance level that we just broke last Friday. That looks pretty nice, 3,800-ish. And then here we have an important one, 4,175-ish. Let's keep it there. If we would do something like this and we're just making the exact same high, for me, that is not a break of market structure. Absolutely not. But I would also not be surprised if we do something somewhere in the middle, maybe fill some of these gaps, as you can see, and then they're tapped and they're filled, and then we're just going lower again. And then we also had this intermediate, a little bit of a run, and then just making a new lower again on whatever news then comes out. So that is at least something that I'm looking out for. And actually, well, I said already many times before, I think crypto will follow then as well. Now we're going lower on the first 5 minutes. Let's see what our dollar index is doing. Dollar index in the first few candles, we are going higher. S&P on the first few candles. I'm going to zoom in on the price action because this can be very interesting. All right. S&P sideways. Now it looks like this is 27. Yeah, okay. So tiny pump up and now going lower. Remember, what this could be the false move. Whoa, my lordy. I want to say this could be the false move of Wall Street, but my God. Okay, 4% now. Wait, let me quickly zoom out. Don't panic. Relax. From top to bottom, so far on the daily, I'm saying this correctly. Where's my thing? Come on. I think we are still below the average. Yeah, okay, so 3%. Okay, so the trading range so far, the average volatility per day is interesting, something to look at. That is somewhere between 3 and 4%-ish. So far, we are still underneath. I said earlier, just early in live stream, said this doesn't still look very good. The money flow is not coming up. Taking the eyes off the chart for a minute, bang, breaking through. Interesting to see. Okay, dollar index right now. Let's, you know what? Let's even zoom in a little bit more on the 3-minute. Okay, so we just we lost the VWAP, we lost the golden pocket, 78.6. We wicked through. Yeah, this is gonna break. It's gonna break. Okay, this could be interesting actually. Let's say that the money flow now slowly going up, and then this does something like this. Then we might have a bullish divergence on the 3-minute. I do have to say that the line here on our chart, like where we really see the chart moving, is usually not as steep as this. It's a bit more subtle, therefore they're also a little bit hard to see. If we would go now at the daily open, right now at daily open, this could be a reversal. The daily open is sometimes used as a point for tapping, for touching, and then going back the other way. So, oh no, and now we are lower. My lordy. Ugh. All right. Let's see how this goes. Maybe we're tapping yesterday's low. Yesterday was Sunday, not super strong because it was not a full trading day, shall we say, on the markets, but never say never. So far, no bullish divergences on the 3-minute. We gotta let this, do not jump into a trade. If you see this, do not jump into the trade. You are catching a falling knife. There are no reversal signs yet. Look at that money flow. Look at that money flow. It's just zigzagging here underneath. Maybe a little bit higher, but we don't see that yet. Think about it. Remember, guys, what I'm always saying, in the first 15 to 20 minutes, you do not trade at all. This could be the false move from Wall Street, which is going lower. Then suddenly we're finding the calmness again. Then BTC is reversing. Could definitely happen. This wick looks ugly on this daily time frame, but like I said, we have not reached our daily volatility yet. Doesn't always have to happen, because of course you have days we have maybe half the volatility, and we have days where we have double the volatility, and therefore you're getting an average, of course. But don't get spooked by this candle. Yes, it's a lot, and we're right away broke some levels, but not extremely. A bit more than 1%, but I have to say it was a little bit of a surprise. Money flow also on the 10-minute coming now quite rapidly down. RSIs are splitting. So what would be nice, but also here, I don't know if it will work out, is that the money flow is going lower. Let's say we bounce off the 0 line. We are making also here a bullish divergence on the momentum wave. And then we also have this very steep one. Like I said, usually you don't really see this like this so steep like this. Nah. You don't really see this. A lot of price action for once. Last week I had a few boring openings, but buckle up, people, because if this is only the Monday, then shit might get crazy. I'm not monetized. I think I can still swear on this channel. All right. Fucking hell. Let's see, what do we have on the 12 minutes? Same kind of story. Okay, so 12-minute bullish divergence out of the window. You seeing that? That momentum wave here is lower than the previous one, so that's not going to happen. 20-minute then. Let's see what we have here. Probably also, yeah, money flow is it looked like it wanted to go up. Let me zoom in here a little bit. You see that? Looked like the money flow wanted to get up here a little bit. We'll see in the next 20-minute candle. That's in 10 seconds from now. Let's wait for that. We're counting down 5 seconds left until we open a new 20-minute candle. Let's see how this money flow evolves. Yeah, flat. Okay, flat. So not as, we didn't go down as much as I thought, but flat-ish. But this looks ugly. Look at this RSIs, man. Oh my God. Yeah, it looks like we will also now break that daily open and going lower. 30-minute then. You know what? I am going to quickly zoom in on the 5-minute because then I can extend our volume nodes again, and then I think actually it also our value area low and high will change, and the point of control. Yeah, you see that? So this one is now a little bit changed. Point of control still up here, and the value area high is also still up here. This looks a bit ugly. Let's see if the dollar index is pumping. Yeah, kinda. Not extremely, but we're kind of. S&P then. Okay, we had a green candle. The money flow is still thick. This we might get a reversal soon. That actually would be nice. You see that the money flow here is thick. Let's see if we have some buyers in the next 10 minutes. Oof, on the daily in the red. I really hope that we're not doing something like this. So we're looking at the BTC USD on the daily. So this chart is a little bit more simplified. We're not really having our daily setups here. Is that if we were go lower and then this also creates a red dot? Yeah, I know what it could be. You could actually make even maybe something like this. Nah, that will be too extreme. I don't think it's gonna happen. But then we're making again a newer low on the price, and then just trapping a lot of people, and then the momentum wave's higher, and then you have your triple daily bullish divergence. Let me tell you, you know what? If that happens, it is we're saying this live. It's on record. If that happens, I am betting the farm. So far, if you have like a triple bullish or bearish divergence on especially bigger time frames, I have 100% success rate with this. Really. I also have it on smaller time frames where you just see the momentum wave doing something like this. Whoop. No, you know what? No. This was a weird drawing. The momentum wave does something like this. Whoop, like this. And then the price goes like whoop, whoop, whoop. Then you really have like this triple and then this on the price. Man, this like I said, if I then enter right here, I have 100% success rate so far with this technique. It is insane. All right. Okay, let's see on the hourly on the simplified chart here. What do we see? This looks ugly. Yeah. Like I said earlier, maybe it looks like it wants to roll over a little bit. Looks like it wants to roll over a little bit. This might look pretty bad, people. 4-hourly, we have a bearish divergence on this 4-hourly. We have this red dot right here, and the RSIs are now coming together at the moment that we are going lower. So I'm afraid that these RSIs stay together and just whammy, baby. Same as the price. People, if this is your first time, then feel free. Oh my lordy, that was yesterday's low as well. Whew. 2% now on the dump. Okay, so now we're also getting close to our daily average volatility, 3.5%. Let's see. Do I have something down those levels? Let me. I need to switch screens maybe real quick. Let me see. By the way, ladies and gentlemen, if you're not subscribed, then make sure that you do. Hit the like button. Leave me a comment. You can ask me anything. By the way, if you want me to look at something, maybe gold, silver, other commodities, the certain stocks you want me to look at, then definitely feel free to drop it. If you see something in the charts that I might miss that you want to share, then definitely feel free to also leave that in the comments. Let me check. What do we got somewhere? Actually, no, not a lot. Matter in fact, you know what? We just talked about that macro point of control. Look at this. Look at what the price is right now. It is right here in the middle. So actually, so it's right here. So you see that? So we don't have a lot of trading volume here on the macro. So we could go lower, and then the next one would be probably around that 20,600. That we have a golden pocket there, and we have some high trader volume. This looks pretty fucking ugly. I'm sorry, excuse my French. Pretty fucking ugly. Man, that went fast. That went fast. I know the chart looks a little bit messy. I'm sorry for that. Just listen to the numbers that I'm yelling. Those are the most important for now. I mean, you could say, you know, that we have also a little bit of a box of support and resistance, supply and demand, however you want to call it. Right now, you see those candles, all those wicks. You know, you could say maybe we'll wick out and then we go higher. I mean, it could be. But the blood diamond on the 4 hour and a bearish divergence. Now that is a combo that barely misses his mark. Barely misses. Let me be honest. Yeah, I think so. That looks pretty bad. Well, we lost all our very micro fib levels, so bears divergence. Sorry, bullish divergence also off the table. I'm also scared to jump into a long right now. Because we're just dumping down, falling and falling. And also, I would not jump into a short because, like I said, we have that point level around 20,600 ish, which is kind of close. Not saying that we're going to hit it, but that's not worth it. The risk reward is too small. It's not worth it. Just wait until we see some reversal signs, or maybe an SFP, as we call it, a swing fill pattern is where the price is trying to break a certain level, and that then doesn't work, and then it just snaps back up the other direction. So that's something like this, and then bang, goes back. Or on the top, of course, do like this, whoop, and then just suddenly going lower again. And usually then you're also hitting overbought, oversold levels on the smaller time frames, so the 1 minute, 2 minute, 3 minutes. That is usually the signal. Okay, let me see. What else do we got? Another 10 minutes, folks, and then I probably gotta go. Well, this box that we just draw looks pretty good, actually. It looks pretty good so far. My lordy. But yeah, because on the macro, like the 4 hour looks ugly, the 1 hour, the money rolls over. You could say, oh, you're kind of now into support, but so far we just don't really see those reversal levels. Here, the money on the 1 hour, you can clearly see that the money is just going lower here. And what concerns me here is then also the RSIs are squeezed together, and then we are going lower, so that looks a little bit ugly. VWAP quite sharp to the downside. So here I don't see this now. Yeah. Let's see if we already see something on the 3 minute. In the meantime, S&P dollar index going a little bit high. This looks weird. This is exactly what I said earlier this week, is where the dollar index on super small time frames not doing the opposite of BTC. So like then you're going down, not saying that's the case, then you're going down and BTC is also going down. Like, huh? How's this possible? And then later on, it's kind of sort of self its way out, and then BTC is kind of going sideways, and then this thing is then go lower high to whatever to kind of compensate the move that it missed early. So now you're just seeing like here a move down and then a move up on the 3 minute. Let's see what we have here for BTC. Just a move down, and now then this candle's going a little bit up. This price action on the very small time frame since a week or so on the dollar index is weird, but again on the macro, it's still kind of confirmed. So that's good to see. And all eyes, of course, are on this dollar index when it comes down to trading BTC. Because this has definitely played out a lot when you just saw it earlier when the dollar index was just pumping for days and for weeks in a row, and of course in the last few weeks we had a major dump here for BTC. Any breaking news on the prices or whatever? Talking about news, by the way, definitely something to look out for in the next couple of weeks are the quarterly results from the big companies, the majors. It's 27th of June right now. If those revenues are lower than expected, the profits are lower, maybe the losses are bigger, they are going to let go on certain outlooks, then that is bad news. Stock markets will definitely go down, and crypto will definitely follow. So that is kind of the chain reaction that we will most likely see then. And and of course the inflation numbers, but so far we just had it, and we just had the Fed out do, yada, yada, yada. So that is now not the hottest topic. I think slowly everyone will look at those numbers from big companies. And of course, now the default of Russia on some of its bonds. That is the first time in 100 years. You could say, but I think the governments will not let it, that this could cause a domino effect. So Russia is then now for the first time saying, hey, listen, we cannot pay off our bonds, so we're defaulting on their debt. And then someone else has a hole on the balance sheet saying, hey, we had a lot of money lended to Russia, and now we need to default on our debt. And then you get this kind of domino effect all over the market. Like I said, I think governments will not let this happen, but it's definitely something to look out for. And like I said, it's the first time in history that this happens. So that will also definitely dominate the financial news in the next few days. All right, let's see what we do for BTC on the macro. Now we're getting a bounce. I would still not take the trade. I don't see a bullish divergence here on the 3-minute. Let's see what we have on a little bit higher time frames. Also, no divergence here. You see that the money flow is still going down here on the 5-minute, so be careful. Let's do the 10-minute real quick. Also looks ugly. If this money flow gets into the red for the 10-minute, then this might just be temporary relief, and then we're just going lower again. You see right here. 15-minute then real quick. I think everything now just is rolling over on this news. If we don't suddenly get spiked back up. Yeah, 15 minutes. Yeah. Well, the 1 and the 4 hour we already did it, so I think you guys seen it. Yeah, so if we were, let's say we are really going down for this week or next couple days, then the levels is first, and of course this box right here that we just drew. You see again a lot of wicks in there, a lot of candles in there. So you could say that's nice supply and demand zone, depending on which side we're in, top or bottom. And if we are breaking that, then this macro value area low is of course important, and that 20,600 that we already talked about. Let me pull it up one more time that you guys can see it. So now we have this thick red line, this macro point of control right here, but it's just because we have a little bit more price action in the weekend there, therefore it's moved to the upside. But it also was in the last 2 weeks always down here at 20,600-ish, which has been a great support and resistance, and I also took some trades from that level. Are we going to lose that? Then I'm looking out for this approximately 19,900-ish, which would be, let me see how much, not even that much actually in crypto terms, 4%. So that could be reached in another day. And if else the top from 2017 is 900, 500, 900, 800, sorry, 19,500, 19,900. Depends a little bit which chart you're taking, where the top is. And if we're breaking that, then these lows here again of 18K. All in all, it looks like on a bigger time frame that we're just making a very nice trading range. You know what? Let's take the simplified chart on the daily, or you know what? Let's do the 4-hourly because else it's a little bit big. So this actually could be just a very nice trading range where we say, you know what? This 23 is kind of then the top. This is our box, and then that 18K is our bottom. And if we are going to the bottom, then we're just putting in a long. If we have also the confirmation on other indicators, let's say bullish divergence or anything, and then we are trading to the upside. And of course, also intermediate, we have these support and resistance lines in there. So no man overboard right now. Of course, there's still a lot of panic in the market, and I mean a lot of panic. So therefore, I also assumed that we might go a little bit higher and just have a little bit of a relief rally, get this money flow in the green again. Now we do see it now on a 4-hourly, but not yet that price action on the daily. And maybe then going back to this big trading range, you still see that we have the golden pocket right here, 26 to 28,000 ish, maybe even in the best scenario hit that resistance here that was supported almighty 29k. Well, if you've subscribed, then you know that we have talked about this so many times, where we had this very long trading range around here. And now we, of course, we reached it, but then we could go higher, go into the golden pocket, hit that 29k, and just going lower again. That was actually the scenario that I was hoping for now. But I have to say, since we had the bearish divergence on the 4-hourly, we're getting blood diamonds, we're getting red dots, money flow is not picking up. I'm thinking that we might have to wait for that a little bit longer, and then we're just going lower again. And like I said, not only is for me personally the eyes on the prize on the quarterly results from companies. If something will come out with Russia, Ukraine, the war, default on debt, then that will dominate the news. And then the last big pillar for me when it comes down to news is all the crypto companies that we're now seeing popping up, having liquidation problems. Is the money really there? Is also a big question now, more and more. Like, we see something on the screen, but is it really there? That's going to be a hot issue for now. All the stuff around Celsius and Luna and other big lending platforms, exchanges, regulation is going to be back on the agenda again. And I really hope that we're getting more regulation, because I really think if there was more regulation, if there were more checks, if there was just something in place that will keep everything a little bit in order, then also the whole thing about the Celsius, I think maybe could have been prevented if there was just someone checking it so now and then. Because now also you see with the Don Kwon whole Luna story is that this guy can just run off and never see him again. So it's ridiculous, it's stupid. But so if you want to mature in this space, then you need that kinds of checks in place, just like we have on the stock markets and big banks and all that kind of good stuff. So we're still far off from where we want to be in the space. With that being said, if then something comes out that we say, hey, big player is going bankrupt, hey, a big player is losing all of his money, and participants, sorry, but you're not getting your money back, then that will definitely be a push to the downside, because everything is so sensitive right now that I think a bankruptcy, or like I said, something with the central banks or the war, then that will push us lower. I think we're just breaking lower again. Let's quickly move to the daily, because this looks ugly again. 20,600. Have we breached it already? Let me zoom in. Let's go. Wow. 20,740 for now. Dollar index, what are you doing? Dollar index, what are you doing? Look at this, a lower low on the dollar index on the 3-minute. Well, I don't have to show you this. This is also low. This is weird, you see? This is weird, actually. It's not behaving the opposite of BTC, and now we're just going lower again. And you see also the dollar index finds it hard to then go higher. And then maybe, like I said, on the macro, if we zoom out to hourlies, 4-hourlies, days, then we do see that price action. Weird. A little bit of decoupling. I think that's safe to say. A little bit of decoupling right here. S&P, what are you doing? Have you given up already on the 5-minute? Fighting a little bit here, fighting a little bit here. This was the Friday session, I think, the 24th. I wasn't there on Friday. I had a wedding, but that looks pretty boring anyways. Money flow now coming down a little bit on the 5-minute. Let's see what the 10-minute does. Bam! What a fat money flow here. That doesn't have to be bad, actually. That doesn't have to be bad. Okay, so we're having a red candle, another red candle, and now then the third one on the 15-minute looks like it wants to push higher. You're seeing what I'm seeing. This looks freaking ugly. We do still have the money flow in place though, but if this does something like this, and this one does something like this, it is hasta la vista, baby. Man. Dollar index. What are you doing to yourself, man? What are you doing to yourself? I get a little bit of a falling wedge here. Usually breakups to the upside. Something like this. Who knows? Who knows? Not saying what happened. Like I said, it looks like the dollar index is a little bit decoupling here on the small time frames. Whoa, 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 whoa. And 20,600 is breached on the 3 minute. Man, are we seeing a mega dump here? It could be. Are we seeing a mega dump here? Whoa, 20,575 ish here. Oh man. Oh, look at the money flow. Look at the money flow. Oh my lordy. Oh, terrible, people. Terrible. You're gonna lose your pension. Terrible. Look at this. Rip and then full zero. Fucking terrible. This momentum wave. My lordy. This momentum wave. You know, I'm gonna be honest. I'm not in trade right now because I'm doing the live stream. Yes, I have some alerts set, but since this is now dumping down so much, and I'm not in the short, hell, I'm not touching anything. I'm not touching anything. Look at this. Look at this. I'm zooming out. Look at this. This current momentum wave. It's all the way down here. We have one that was a kind of like here. That was on 25th of June, but wow. Man, this stuff's pretty deep. Wow. Okay, listen, folks, I'm gonna wrap it up, but not gonna lie, doesn't look that good. Not gonna lie. That 4 hour bearish divergence that formed in the weekend is playing out now here during the week. And the S&P is fighting a little bit here with the zero line, going slightly higher. Who knows that this was the false move to the downside for, what is that, approximately 1% or something? Not even. A little bit less than 1%. Top to bottom ish, and then curving higher. Would be nice. Would be nice. That's then the false move, and then the actual move starts, and then we're going higher. Now, since we just dumped down so much, let me see what I'll be looking out for. We can take this. We can take this out. Oh, actually, sorry, it's the other way around. So if we're now going higher, I will be looking out for the 38.2, which coincides with yesterday's low. 0.5 then is a little bit in the middle, is a 21k-ish. That 21k is also important one. I saw some people posting 21k, 20k, 21k, 100, 21, 200. It's all kind of the same. I mean, come on, people. $100 more or less. And then we have the golden pocket, which is also coinciding here with the macro point of control, the daily value area low. We have a PDEQ there, so that tiny box right there, that is going to be an important one. So that is this one right here. If we reach that, that is somewhere between 21,230 and 21,100. I think that is an important one. Yeah. Okay. So those are anyways the levels to the upside. But now I would say let this baby run out. If you're not in short, just let it go. If you are thinking about going long, then I would say let's wait first until we had hit some levels, or at least making some reversal signs, because now we hit that important 20,600, which is important, but we don't see the divergence yet. We don't see the money flow going up yet. So that is still quite tricky. I mean, look at this on the 5 minute. Oh, sorry. Look at this. I maybe want to see something like this. That would be nice. So right now, I ain't touching it. All right. All right, folks. I think that will be it for now. If you haven't subscribed, then please do so. Also, smash up the like button. Share the video, the link with other people if you want to spread the knowledge. Be careful this week because, like I said, I feel like we might have some black swans here and there, and I would not be surprised if we're getting another big dump down. For now, our big trading range is somewhere here between 23k and 18,000. That is quote unquote only 5,000, and I know there's only 10% worth 50k, but now we're talking about a 30% trading range. So this can be significant, but of course, always be very, very, very careful. And like I said, this 4 hourly bearish divergence and confirmation, blood diamond, price going lower, etc., 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 etc. Definitely is the most important. I will keep an eye on this because I think that this is going to play out, and we might get some smacking. Now which kind of levels I'm looking out for. Be very careful, folks. It's still not the time to be brave, to be hero, to double your portfolio. Just take it trade by trade. Make sure you have your levels in place. Make sure you have a stop loss in place. Because if you were long here and you did not have a stop loss, man, if you leverage it up, then you will be 100% liquidated. 100%. Yeah, that was quite the move since that New York opened. So just be careful with what you're doing. How much is this so far? 2.5%, 3%. Bang! That's a lot. If you're high leverage on this, you got liquidated 100%. You got a margin call. Yeah. So like I said, just be careful. Take your profits. Of course, always do whatever you feel like is good, but I am at least cash at the end of the day because I don't want to get caught up in a pump or dump like this and these kinds of levels. $500, $1,000 on the price is major. It's major when we're trading at such a low levels. So that's important. And again, I think for now and the next couple of weeks, the news will dominate the stock markets, and the stock markets will dominate the dollar index, and therefore also BTC. And therefore, that's just kind of a train. It's just going from one side to another. The news is good. Then we maybe see a little bit of a rally on the stock markets. The dollar index is weakening a little bit, and therefore BTC is pumping. And that's just the macro story, and these are train ranges. Okay, guys, now I'm really going to wrap it up. Thank you guys so much. Enjoy your day. Don't forget to check out all links and descriptions like Twitter, Instagram, all the kind of good stuff. And I'll see you guys very soon again. Thank you guys so much. See you next one. Bye-bye.